All right. Good morning, everybody. Good morning, all you magnificent melon heads of the world. Happy Thursday, everybody, and happy Inflation Day. Today is July 11th, 7/11, 2024. And of course, the top story is inflation. We got the consumer price index this morning, and it was a beat low. Inflation is falling, and no, that doesn't mean prices are falling, as I'm sure many of you will let me know in the comments. Inflation is down. Let's get right into the numbers, shall we? Headline inflation 3.0% year over year. That is down rather sharply from 3.3% last month. So prices are going up slower. But more importantly, that 3.0% number is below the 3.1% that the market was expecting. Everybody was expecting inflation to fall, but it fell a little bit more. On a month over month basis, we even got a negative number. How about that? A little bit of deflation. With your coffee this morning, the month over month headline number, negative 0.1%. Prices actually fell. Oh, I'm sure people are going to shout about that one in the comments too. But that negative 0.1%, that's down from 0.0 last month. And that is below the plus 0.1% that was expected. So again, it's a beat low. On core inflation, 3.3% year over year. Core inflation, so a little bit higher than the headline number. That's down from 3.4% last month and below the 3.4 expected. Again, a beat low. And month over month core 0.1% year over month over month, down from 0.2, and 0.2 was expected. So all four of those, headline and core, year over year and month, it's a beat across the board, lower than expected, down from last month. Now, let's talk a little bit about what's driving this. The two main themes when we look at the chart, and we'll open that up in a little bit, you can see the specifics, but we had a big drop in the energy index, which was led by gasoline prices. We had a 3.8% drop in gasoline prices for the month of June. So that put a big pull down on the headline number. Now, shelter costs are still your biggest contributor to the upward movement in prices. So you had gasoline declines offsetting the rise in shelter costs, but also very important, that shelter cost number, it's coming down. It's still going up, right? I mean, prices of shelter are still going up, but they're going up slower. The index for shelter rose 0.2% this month. That is after 4 consecutive months of rising 0.4%. So we've all been sitting here analyzing these CPI numbers for a long time, and a lot of analysts, amateur and professional alike, self-included, have been scratching our heads wondering, why is the index for shelter not coming down? It should be coming down. It's taking so long. You've heard the lag. People are talking about the lagging indicators. Well, it's finally showing up. And now that shelter is getting in on the lower inflation moves, we're probably going to start to see these CPI numbers drop pretty sharply in the months ahead, as long as this isn't just a one-off. Now, home prices are still rising, rents are still rising in some markets, but for the most part, the growth has slowed. So, this inflation was a beat any way you look at it. The initial reaction from markets was straight up. I mean, stocks, all three indexes went straight up, but you know what? They're turning now. They gave up a lot of those pre-market gains they rose for about 10 minutes, and then they started falling. They're still up on the day, but it's possible recession fears might be creeping into that celebration of the Fed rate cuts. We also saw the DXY, the dollar went way down. We saw metals surge. Metals are still surging, holding on to those gains while stocks are giving them up. And we saw interest rates take a dive. So prices are moving this morning in everything. It's going to be a pretty volatile morning. So who knows, by the time, 2 hours from now, they could be all over the place. Now, also of note this morning, we got a couple of other stories. The earnings reports are starting to roll in. And while the market on one side is celebrating these lower than expected inflation prints, on the other side, we got some earnings reports from some pretty well-known names that said it doesn't matter what inflation is doing right now. Companies are getting crushed by the inflation that has already happened because they're losing pricing power. Let's talk about a couple of those real fast. Delta reported their stock is getting beat up right now. Their revenue was up 5.4%. Okay, pretty nice climb in sales. We're hearing about a surge in travel demand back to 2019 levels, which, actually the population is much bigger than it was in 2019. So still people are traveling less than they used to, but there's more people now. And so the travel numbers are climbing here. A lot of corporate travel is coming back. But remember those pilot strikes? Remember the big raises that we were talking about last year, last fall? Well, those are starting to take their hit. And these companies have lost pricing power. Delta's lowering airfares to keep people flying, and their expenses went way up. So net income is down 30% at Delta Airlines. Even though their revenue was up 5.4%, their income is down 30%. That's being driven by a 10% increase in operating expenses. Those higher labor costs, man, they're really cutting into them. Also, their forward guidance was a little light at 4%, so that stock is getting hurt this morning. Also, we got earnings from PepsiCo this morning. Again, another one that's disappointing. Their net sales were only up 1%. Keep in mind, we've got 3% inflation. That means they're selling less stuff, right? They're losing pricing power. Even though we've had all this inflation, Pepsi has been unable to pass those costs on to consumers, and now they're starting to hit it. Take a look at some of these volumes here. Frito-Lay volumes down 4%. Beverage volumes, kind of important for Pepsi, down 3%. And their guidance was decent, but still a little light. So Pepsi taking a little bit of a beating this morning. They don't have pricing power. Consumers are tapped out. They're trading out for lower price brands. You know, going like the off-label, the Mr. Pip instead of the Pepsi is what people are buying there. And that's starting to hit their earnings. And another really interesting one is not a company you hear about a lot in stockland, 7-Eleven, or specifically 7 & I Company. It's a Japanese-held company that owns 7-Eleven along with some Sunoco gas stations here in the U.S. But the numbers for 7-Eleven were terrible. Net profit down 49% year over year for 7-Elevens. Nobody's going to 7-Eleven anymore. They just can't afford to. Operating profits for overseas, which keep in mind a Japanese company. So when they say overseas profits, that's mainly their U.S. stores, down 79%. And keep in mind, guys, we're talking about earnings reported in Japanese yen, and the Japanese yen is falling like crazy versus the dollar. So you've got a lot of currency tailwinds here that should be driving those 7-Eleven numbers up, right? Because they earn dollars and then they convert them to yen and report them in yen. And the yen is falling, which means when they convert those dollars into yen, they're earning more yen. So just the currency effect alone should be sending 7-Eleven's earnings upward big time, but that is not happening. And once again, people are not shopping there because they can't afford to. It's too expensive. And their labor costs are going up and their rents are going up. So two different themes playing out in the market today, guys. We've got lower than inflation. Yay, Fed goes Zerpenber. But then we've also got companies reporting the damage is already done. And that's kind of the conundrum we find ourselves in here, right? Okay, yeah, Zerpenber, the easy money, it's coming back. But remember, like Johnny Bravo keeps telling us, it's after the rate cuts start. That's when the mayhem typically happens because the Fed is usually too late to act. And we're seeing that playing out already this morning. Why don't we shrink my big melon of a head and let's see what is going on in the markets this morning. Don't forget that like button for the algorithm, guys. And if you're new here, go ahead, hit that subscribe button too, because we do this every morning, CPI or no CPI. So come and have your coffee with the melon heads going through markets here and take a look at the reaction to stocks here. This was pretty interesting. Right now, the S&P, it's positive, but just barely, only up 2 points ahead of the open, 0.04%. Big gap up on that lower than expected CPI. Stocks rallied. They really like that. Okay, Fed goes Zerpenber. But then look what happened. Stocks just started to give it up. I mean, they just gave up almost all of those gains. They're back rising now again here, but only 2 points. So the market was very quick to celebrate. The algos triggered their buys, but something happened right now. The market saw something within a few minutes that they didn't like. We'll see what it does. Again, it's still early. It's going to be a volatile day, but right now, market's giving up some of their gains. Dow's doing the same thing, currently up 16 points, 0.04%, big gap up on the report, sold off, came back down to almost even. Now it's rising again, but just a fraction of 1%. And the same thing from the NASDAQ, big gap up, sell off back down, and now creeping up. So stocks are having second thoughts here. Maybe those recession fears are kind of creeping in as they celebrate Zerpenber. I don't know, but it's a little unusual. I would expect markets to be higher here. I'd expect a little bit of caution. Maybe the Fed acted too soon, but I'm seeing a lot of caution here. Meanwhile, on the U.S. dollar front, though, there is no caution here. The dollar is falling and still falling, down 83 basis points right now, 104.22 on the DXY. And again, all of that coming pretty much instantly on the report of CPI, fallen again here. So the dollar much weaker. That's going to put some upward pressure on asset prices. Taking a look at bonds here also, falling across the board pretty much here. The 30-year Treasury down 6 basis points at 4.407. The 10-year down 10 points, and that was an instant drop. That 10-point drop in the 10-year, that happened almost the second CPI hit, and it pretty much just stayed there. 4.18 on the 10-year Treasury, down 10 basis points. The 2 is at 4.498. That's down 13.5 points. And the 1 month is at 5.337. That's actually a little bit higher than we were this time yesterday. That's interesting because that rate cut in September, I think, is all but guaranteed now. Now, looking over at the commodities board, it is a good day for my fellow stackers. Gold and silver just loving this inflation print. Gold and silver are liking that lower dollar, that DXY, and they're liking those lower interest rates because bonds are competition for precious metals. Spot gold back over 2,400. We got 24.07 for spot gold. That's up almost $36 this morning, a full 1.5% higher for gold. And check out my favorite of the shiny silver, back above $31. Spot silver at $31.60. That's up 78 cents, 2.5% higher for silver. Congratulations, stackers. I like the shiny. We've got coppers down about 0.5%. Platinum is up 1% and change. Palladium is up 1%. And WTI crude oil for August futures, 82.35. That's up about 1/4 this morning. So a lot of green in the commodities world. Take a look at the silver chart, guys. Very nice, very nice. We have now definitely broken out of that consolidation pattern, and we are off to the races again. I would love to see us close above 32 at some point. Maybe we don't get that today. That would be a pretty big move. But I want to see us take out that previous high. But silver is off to the races here this morning. Liking to see that. Bitcoin's getting in on the action as well, albeit not as much. Still struggling with that 200-day moving average shown here in red. Bitcoin on Coinbase is at 58,546 right now. That's up $834 versus yesterday, but off its highs from this morning. We had initially reclaimed that 200-day moving average here, but we once again are back below it. So that is acting as a strong ceiling of resistance for the time being. Watch that 200-day moving average in Bitcoin. All right, now let's get into the actual inflation report. The annual inflation rate in the U.S. fell for the third straight month to 3% in June of 2024. That's the lowest since June of 2023. That's compared to 3.3% in May and below forecasts of 3.1%. So you can see the chart here going back 12 months. That's the lowest we've had in quite a while. And more importantly, if we zoom out on a 5-year chart, okay, I guess this is something to celebrate. So, right, here's that peak of the inflation that we hit. You know, we peaked in June of 2022 at 9.1%. We fell fast on those rate hikes. But guys, look, you know, we came down to 3% in June of 2023. We bounced around. We're still there. So, yay, congratulations, Fed. You're only missing your arbitrarily selected 2% inflation target by a 50%. All right, ride that rocket, baby. Maybe that's why markets not really celebrating quite so much. Inflation is still well above the Fed's, again, arbitrarily selected 2% target. Why 2%? That's the temperature the frog doesn't notice. He's being boiled alive. If we turn the heat up anymore, the frog gets pissed. And, well, so they go for 2%, and they still haven't hit it, and they're still way off. But we are getting there. We're improving, albeit slightly. But I think more importantly, this report confirms that that second wave of inflation that a lot of people were afraid of in January when we started to see CPI creep up again, that is pretty much done and over with now, at least until the Fed turns the money printers back on. On a month-over-month basis, the consumer price index in the United States unexpectedly declined to 0.1% month-over-month. Again, it declined 0.1%, so that's a negative number. Prices actually went down on average for the month, as reported by the Bureau of Labor Statistics. Please don't jump down my throat. That's following a flat reading in May and compared to expectations of a 0.1% rise. So there you go, a negative number. It's the first negative number we've seen in quite a while. And then let's look at the 5-year chart. Now, this one is a little more hopeful, all right, because you can see, all right, the month-over-month numbers were getting ridiculous. They started to fall. We kind of bounced around here, right? But now we've made a new low. All right, so that the month-over-month number, I think, is a little more encouraging than the year-over-year number. That is showing significant progress. Dare I say, we might even be moving sustainably towards our 2% target, as Jerome would say. On the core inflation reading, not quite as rosy because a lot of that decline in headline was being driven by cheap gasoline prices, which is very volatile. So core inflation still a little bit high at 3.3%. That's easing from 3.4% in the prior month, below forecasts of 3.4%. But hey, look, ongoing progress, guys, a pretty steady fall in core inflation. So things are looking better there. And core inflation month over month came in at 0.1%. So still rising, still a positive number, but lower than the 0.2% that we had last month and the same 0.2% we were expecting. Again, it kind of shows like, yeah, we were declining and then there was a little bit of a surge late last year into the beginning of this year. Now we're falling again. So again, this is a positive print, guys. This is good news. Inflation is falling. But of course, there's any of a dozen asterisks you could attach to that. The government data is understated, and people still struggling with the fact that prices rose so much last year, and prices are still rising, and they're already too high, right? You could attach all those riders to it, and I agree with all of those points. But at the very least, the rate of change is slowing. Now, this is showing the actual chart data. Here is the headline number, 3.0% year over year. Here is the month-over-month number at negative 0.1 for all items. Let's talk about the food index at 2.2% year over year. We did see a little bit of acceleration in food prices, 0.2% month over month versus 0.1% last month. Food disproportionately affects the poor, so that's not really such good news there. But energy is going to be a big relief. Year over year, we're at just 1% on the energy index. And then month over month, we had a 2% fall in June. That is 2 consecutive months of 2% falls in energy prices. So utilities, gasoline getting a little better there. The biggest contributor to that energy index was a 3.8% month over month decline in the index for gasoline. So that is going to lead to the headline number coming down pretty significantly. Now, all items, food and energy, that's going to be your core category where we got 3.3%. Year over year, 0.1% month over month. Check out the indexes for vehicles, guys. This is pretty interesting. Used vehicles, we got a negative year over year number. I'm sorry, not used, new vehicles, a negative year over year number for new vehicles. All right. Now, we need a lot of those because cars got ridiculously expensive in 2020 and 2021. But check this one out, man. Negative 0.9% year over year for new vehicles. And then look at the month over month number, negative 2%. Not so impressive, but that is 1, 2, 3, 4, 5 months in a row of month over month declines in new vehicles. It is a buyer's market for cars, folks, any way you look at it. And used cars and trucks looking even better. Check out the year over year number for used cars and trucks, down 10.1% year over year. Now, that is not as many consecutive months in a row. We had a few positive mixed in with these numbers, but hey, big negative monthly number, minus 1.5% month over month versus a positive 0.6 last month. But you can see we've kind of been bouncing around a little bit, but big numbers here. We had a negative 3.4 a few months ago. So vehicles getting very cheap, not very cheap here. Vehicles are getting cheaper. That's what I'll say. They're not cheap. Vehicles are still ridiculously overpriced. But there is relief on the horizon. That's the good news, guys. Car prices are coming down. Now, most people still can't feel it because the interest rates are still so high. So car payments are still very high, which I think is probably contributing to some of these sharp declines in prices. We've got apparel was pretty much flat for the month, 0.1% increase versus a 0.8% year over year. Medical care commodities up 3.1% year over year. The shelter index at 5.2%. That is the smallest increase in shelter we've seen in a long time. And we also got a 0.2% month over month increase in shelter. So the rent is still getting more expensive. That's the first takeaway. It's still going up, but it is going up a lot slower than it has been. We had 4 months in a row of 0.4%. Before that, it was 0.6%. So finally, we're starting to get a significant move in shelter down to 0.2%. A lot of people have been wondering, where is that decrease in the shelter index? It should be showing up by now. What is with this lag? Well, it's finally starting to show. Still positive, but I expect we're going to start to see negative numbers in the months ahead here. Meanwhile, another key category, the Transportation Services Index. I did a video about this one about a year ago. This is very important because this is part of that core non-housing services that Jerome Powell has said he wants to start seeing that come down. And we got our second consecutive negative monthly number for transportation services. That's down 0.5%. You're going to hear a little bit of talk about that with the Delta Airlines category that we're going to talk about in a minute. Cheaper airfares. Price cuts are starting to eat into the profit margins of airlines, and you can see it in the Transportation Services Index here. Also, 9.4% year over year, though, still coming down, but got a long way to go. These things got ridiculously expensive last year. So inflation was a beat, guys. It's coming down. Prices are still going up, sadly, although the month-over-month number being negative for the first time, that's encouraging. Still got a long way to go. We're still a long way from the Fed's arbitrary target. But I think the takeaway from this inflation print now is that you need to pay much more attention to jobs data, labor market data. I think that is now front and center in the Fed's decision-making process. So anything suggesting a weakening in the labor market is going to be very important going forward here, and there is ample evidence that that is happening. Now let's talk about this one. Some of the companies feeling the previous effects from the inflation we've already had. Delta shares tumble after outlook falls short of estimates despite strong summer travel demand. Delta Airlines on Thursday forecast record revenue for the third quarter thanks to booming summer travel demand, but its forecast fell short of analyst estimates as carriers discounted fares after expanding flights. Discounted fares, there is that decrease in transportation services. Airfares is a big component of that. In the current quarter, Delta expects sales to rise no more than 4%, lower than the 5.8% growth forecast by analysts polled by LS and EG. Expects adjusted earnings of $1.70 to $2. That is short of the $2.05 analysts expected. So we got some light guidance from Delta here also. Market is not liking that. Shares of Delta fell about 9% in pre-market trading. Now, on to the numbers they just reported. For the 3 months ended June 30th, Delta brought in adjusted revenue of $15.4 billion. That's up 5.4% from last year, shy of Wall Street estimates. But a 5.4% increase in revenue is still pretty good. But check out the net income. Net income dropped almost 30% from a year ago to $1.31 billion or $2.01 a share, with operating expenses up 10% from last year. And, right there, you can kind of see fares are going down. Profits are going down. Operating expenses up 10% year over year. The airlines are paying the price for previous inflation. They've lost pricing power. They can't raise airfares. They're actually going down. And remember that big, all the pilot strikes and the labor negotiations from last fall, big raises across the board, taking a big chunk out of Delta Airlines earnings here. So even though their revenue's up 5%, a 30% drop in their profits here. Now, adjusted for one-time earnings, Delta reported earnings of $1.53 billion or $2.36 a share, in line with estimates. And then we've got the second quarter was really strong performance. CEO Ed Bastian said in an interview, what you see happening is the impact in the domestic marketplace of the lower fare discounting that's been going on this quarter. I would add lower fares and higher expenses. So Delta Airlines not doing so good this morning. The stock is down 8.84% here, trading at $42.91. That's down almost $4. So Delta not looking so good. And we got a similar story at Pepsi here. PepsiCo earnings beat estimates, but U.S. demand weakens. Pepsi reported mixed quarterly results on Thursday, hurt by declining demand in North America for its drinks and snacks. The company also narrowed its revenue outlook for the full year. Pepsi now expects organic revenue growth of approximately 4%. That's a more cautious outlook than its previous forecast of at least 4%. The company reiterated its guidance for core constant currency earnings growth of 8%. So those numbers look all right, but that's what they're forecasting. Now let's go to the quarter they just reported. Pepsi posted second quarter net income attributable to the company of $3.08 billion. Or $2.23 a share, up from $2.75 billion or $1.99 a share a year earlier. So, year over year earnings growth. Excluding items, the company earned $2.28 a share. Net sales rose nearly 1% to $22.5 billion. Now, that's pretty terrible. When you've got 3% inflation, And really, for the last year or so, it's averaged closer to 3.3, 3.4. But their net sales are only up 1%. That means their volumes are falling. The company's organic revenue, which excludes acquisitions, divestitures, and currency changes, increased 1.9% for the quarter, fueled by Pepsi's international business. But the company struggled in its home market, hurt by product recalls and shrinking demand for its products. Executives said in prepared remarks that consumers have been more value conscious. After several years of price increases, shoppers are pushing back by buying fewer bags of chips or switching to cheaper private label options. Previously, Pepsi's executives said that low-income consumers have been struggling the most. So here you can see that loss of pricing power. People are struggling with the inflation that's already happened. And that's one reason why I think the market maybe not celebrating the CPI print so much, is we're starting to see the pain from previous CPIs is really showing up in company earnings now. And, they've lost pricing power. They can't pass those increases on to the consumers. The consumers will just buy Mr. Pip instead. Now, Frito-Lay's North American volume declined by 4%, while Pepsi's North American beverage unit saw volume shrink by 3%. There you can go. Higher prices, less stuff selling. The metric strips out pricing and currency changes to reflect demand. So the solution to higher prices is higher prices. Pepsi really hurting from the prior inflation here. The stock is down 2.81%. It's down about $4.60 this morning, trading at $159. And another company that's hurting from the inflation was 7-Eleven. And this one was kind of unusual this morning, but the numbers were really big here, and that's why I'm reporting this. This isn't a stock a lot of people follow. 7-Eleven owner posts profit drop on weak North American earnings. Once again, inflation hurting the consumer. This is the R word. The recession is coming to mind here. 7&I Holdings, ticker SVNDY, reported a drop in first quarter net profit as its overseas convenience store business deteriorated sharply, partly due to higher cost of products and labor in the U.S. This is a Japanese company, so when you hear overseas, they're talking about U.S. businesses. The Japanese owner of 7-Eleven and other retail stores said Thursday that net profit fell 49% from a year earlier to 21.39 billion yen. That's $132.2 million. That's for the 3 months ended May 31st. That missed estimates of 41.73 billion yen. Wow, that missed by a huge margin, So really bad. Revenue increased 3.2%, roughly in line with inflation, to 2.735 trillion yen. Operating profit for its overseas convenience store business fell 79% to 4.47 billion yen. That's amazing there. 79%. I mean, the profits at 7-Eleven have just been almost wiped out. That's inflation killing that business, and they cannot pass that cost on to consumers. At its main North American operations, same-store sales dropped and profit margins deteriorated due to higher cost of products, labor, rents, and other expenses. Everything went up, all right? Labor, rent, products are more expensive. Everything went up, but they cannot raise their prices. People won't buy the stuff. 7&I said it's trying to boost sales by offering affordable private label products and delivery services. And then recall what we said in that Pepsi report there, how they're saying that price increases aren't working because people are switching to private labels. Here's 7-Eleven doing the same thing. Look at that, a 79% drop in profits for U.S. 7-Eleven stores. Who had that on their 2020s bingo card? Rough day for markets here, guys. Now, again, the market's probably going to celebrate that inflation print, but there's some very recessionary, some very bad stories lurking beneath the surface here this morning. We'll see which one actually drives more market sentiment. And I want to say thank you very much to Mr. Joey Socks, a.k.a. Paulie Walnuts there, who gifted 5 Nobody Special Finance memberships. Thank you, Joey. I appreciate the support of the channel. And guys, let Joey know that you are very grateful for that. If you received one of those memberships, give Joey a shout out in the comments. Thank you, sir. And thank you to Cole Marsh, who says, Silver Baby. I like the shiny, Cole. I hear you, brother. Silver Baby, Silver. Let's see what Silver's doing right now. Spot Silver is up 65 cents. All right, giving up some of their gains a little bit here. There was up 85 cents earlier. Are we going to get that smash at the open as we oft do? I don't know, but hey, for now, I'll take the 65 cents. Thanks again, Cole. I appreciate the super chat, the support of the channel, and I like the shiny. I got to flash my Murica silver bar just because. And thank you very much to Mighty Mike, 53 who says 2.6 million on full-time jobs gone. Recession. There's those all-important labor market data points. I agree. The loss of full-time jobs, that is a big one, Mike. And hey, let's talk about part-time jobs for a second too while we're at it, because nobody really noticed the loss of full-time jobs unless they actually read the reports like we do here. But everybody's been like total jobs added because of all the part-time jobs. Well, take a look at 7-Eleven there. Do you think 7-Eleven's going to be hiring with a 79% decline in their profits? Hell no. We might see 7-Eleven stores shutting down. There goes your part-time work. So I really think those part-time jobs that have been masking the fall in full-time jobs, they're going to start going away. And when that happens, guys, that unemployment rate is going to start climbing really fast. I'm going to go ahead and say there is slim chance, dare I say no chance, the unemployment rate stops at 4.5%, as the Fed has told us they would. 4.5% unemployment is the new transitory. Thank you very much, Mike, for the super chat and the support of the channel. And thank you to Mr. Hunt and Cover, who has been a member for 4 months. Thank you, Hunt and Cover, for being a melonhead. He says, it's a beautiful day in this neighborhood. Thank you, Hunt and Cover Rogers. I'm guessing that's your last name because it is a beautiful day in the neighborhood. Won't you be my neighbor? Sure, why not? He seems like a nice guy. Thanks, Hunt. And Metal Seer says 7-Eleven on 7-Eleven. I didn't even pick up that irony. Wow. I'm about as sharp as wet leather this morning. You're right. 7-Eleven post shitty earnings on 7-Eleven, driven mostly by inflation on a day when inflation is supposedly coming down. Man, sometimes irony can be pretty ironic. What movie? Let me know in the comments. Thank you very much, Metal Seer. Appreciate the super chat, sir, and the support of the channel. And thank you to Dan Hadeen, who says 7-Eleven did buy Speedway last year, adding to it. Speedway, I think, is Speedway, that's the Sunoco convenience stores, right? I mean, where I'm at, every convenience store is Wawa. This is like the empire of Wawa where I live. So there's a few 7-Elevens scattered here and there, but that's pretty much it. I think Speedway is the Sunoco chain of convenience stores. 7-Eleven, they bought them last year trying to expand their business. But the article would go on to mention some of those things that it's basically across the board. It's all convenience stores are struggling in the U.S. It's not limited to just the 7-Elevens. Thank you very much for pointing that one out, Dan. Thank you for the support of the channel. And Mr. Phil Renner, who's flashing the stars and stripes, the Star Spangled Banner this morning. That comes up in the chat as American flags. For whatever reason, it just says us, 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 us on StreamYard. But appreciate the America, Phil. I like the shiny. I like America. That is a fantastic note to end the stream on. Thank you, Phil. Thank you, everybody, for having your coffee with the Melonheads. Inflation is still there. It's coming down, but prices are still going up, especially if you strip out gasoline. And the market is struggling from the inflation that has already happened. We'll see where the market goes today. Will that optimism trump the pessimism as it often does? Only time will tell. Thank you guys for having your coffee with the Melonheads this morning. Thank you to all my Melonheads and magnanimous Melonhead channel members on YouTube and Patreon. Links down below to all that good stuff, should you feel so inclined. Hi, Mom. Hi, Dad. I love you guys. Until next time, live small and dream big.